Hi, Assalamualaikum class. So today we move to a new topic, which is topic 7 on withholding tax, WHT and double taxation agreement DTA. At the end of this topic, you will be able to apply the withholding tax requirement on payments made to non-resident person. The second one, identify the rate and compute the withholding tax. The third one, identify the type of payments which is subject to withholding tax. Next, identify the relevant provisions for withholding tax in the Income Tax Act 1967. Next, understand the effect of non-compliance of the withholding tax requirement. This part is actually you have learned in the topic of corporate taxation. And the last one, understand the concept of double taxation agreement, where the subtopic of that will be the concept of permanent establishment. So what is withholding tax? It is actually a tax imposed on the non-resident person who has business dealings in Malaysia, but they does not have business presence in Malaysia, but they just merely render service from his home country. So this is known as trading with Malaysia. So withholding tax is actually an amount withheld by the resident payer. Normally it's the resident payer. Later on, I will actually explain on how it can also be a non-resident payer. On income earned by a non-resident, which is payee, the person who received the amount and paid to the Inland Revenue Board of Malaysia. The non-resident payee will receive only the net payment after deducting the withholding tax, while the payer, which is the resident payer, will act as an agent and responsible to pay the withholding tax. So if you look at the diagram, so we have the resident payer, and there is also a situation where it can also be a non-resident payer. Okay, they will actually pay withholding tax to the IRB, and they only give the net payment to the non-resident payee. So they don't give gross payment, okay, to the non-resident payee. It must be deducted with the amount of withholding tax. So the scope of withholding tax is only restricted to the following types of payments made to non-resident. The first one, we have interest income, which is section 4C income. Then we have royalty income, which is section 4D income. And we also have contract payment, which is considered as business income under section 4A. Next, we have public entertainer, okay, which is actually normally falls under section 4B employment income, but it can also fall under section 4A business income. Next one, you have other income, which is section 4F, which is income that does not fall under section 4A until 4E or even special classes of income. So we have the last one, special classes of income, section 4E capital, which only actually specifically for the non-resident. So the condition. The non-resident would only be liable for withholding tax if all the following factors are present. The first one, the recipient must be a non-resident. Income has to be one of the income in the specified categories, as has been explained in the previous slide. The third one, such income has to be deemed derived from Malaysia. So we will look into the deemed derivation of income when we move to one income to another income. Next one, the income is not attributable to a business carried on by the non-resident in Malaysia, but this is not applicable to contract payment. And the income must not be exempted by Schedule 6 of the Act or double taxation agreement between Malaysia and the non-resident's home country. So these are the rates of withholding tax. We have royalty, the rate is 10%, special classes of income, the rate is 10%, and other income, section 4F, the rate is 10%. Contract payment is 10% plus 3%. We will look further later. Interest 15% and public entertainers remuneration 15%. So other than contract payment, withholding tax is a final tax. So meaning that non-resident need not account for further Malaysian tax once the withholding tax has been complied with. They only have to pay withholding tax, that's all. But for contract payment, withholding tax is not a final tax. Responsibility of payer. The resident payer is the agent for the non-resident payee. It can also be a situation where the payer is also a non-resident, which means the situation is between non-resident and non-resident, whereby the non-resident payer is somehow like acting on behalf of the IRB. And it is the responsibility of the payer to pay the amount of withholding tax to the Director General within 1 month, where for this part, okay, IRB say that the 1 month is actually considered as 30 days. After the earlier between the payment made to the non-resident or crediting the payment to the non-resident. So we will count the 30 days after the payment made or the crediting the payment to the non-resident.